We're kicking off a special series today called The Ultimate Portfolio. All week, we're showcasing the traders' 5 best ideas right now, stocks, ETFs, whatever they think would comprise the ultimate portfolio, and how to invest in a market that is near all-time highs. Stephanie Link, you are up first.
Okay.
A portfolio that consists of, you want to give me the names?
Sure. Cisco, EOG, Southwest Air, Goldman, and United Rentals.
Okay. Talk to me about why, the ultimate portfolio for somebody that professionally has 55 stocks, I think you said in your book.
Yeah, and I own all.
Why these 5?
And I own all 3 of them, all 5 of them rather. So I was trying to find some laggards, but I was also trying to continue on with some winners. And I'm looking for kind of best in breed in each industry. That's kind of my style. If I can get best in breed on sale, that's what I do. The one that's not on sale, I should say, because it's had such a nice run, is Cisco. But they sounded so good on their quarterly conference call. I think the momentum is so strong. 7% product growth. They've had revenue beat 3 quarters in a row. They're executing in a wonderful way at this point. They have new products, IT spending environment great. It's still trading at about 16 times forward. So it's not super cheap like it was, but I like it a lot. EOG is another one. I think the energy market is poised to work higher between now and the end of the year. We know energy has been kind of flailing around, as have financials. But I do think that energy with this one, again, best in breed in the E&P space. They've got great prospects in the Permian. They always have. They've had low cost and the best management team. Great balance sheet as well. I would say Southwest Airlines is a new name for me because I haven't been invested in the airlines, but I do think down 7% year to date, trading at 13 times forward estimates, is attractive. I think capacity has gotten into control within the industry, and they have pricing power. Particularly if oil prices go higher, they will be able to pass that along. Goldman Sachs.
Yeah, talk to me about Goldman.
I know Goldman is
the endless battleground.
Yeah, financials have been for sure. But I mention this because I've been adding to it recently after meeting with the new CEO, and I really think there's places that they can fix, that they can add technology through M&A, but also just kind of fine-tune where they are in their sizes and their scales of their businesses. And I just feel like they're buying back stock. The CEO is going to be out on the road talking about the story where they can actually fix some of the businesses. And so I think that one should do well. And then finally, URI. I've liked this one for a very long time. It's pulled back. It's down 10% on the year. It trades at 9 times forward estimates. I think the U.S. construction market is still on fire. They're getting pricing power. They've got scale. They're the industry leader.
Okay. Thank you very much.
Thanks.
All right. Josh Brown, you're up. You can go through some of these stocks on your own. We can list them. We'll list them for the viewers, and you can talk about them. Why did each one of these make it into your
I was not told that I had to follow Stephanie. Now I'm very intimidated. Well, why don't you tell me like which one you want me to get into, or I can like give you a couple of sentences on all of them, because
so we just had Stephanie put Goldman as one of the stocks she would have in her ultimate portfolio.
Right. So
you take another stock.
All right. So like. Well, the broad theme here is that if you ask me this question in 10 years, I'll probably have the same 5 stocks. And I think that's a really important point that I want to bring out on all these companies. And within reason, if there's something happens, I may have to change my mind. But these aren't trades. So Alphabet, I view it as kind of like an actively managed ETF that's capitalizing on the entirety of what humanity might look like in the future. Everything from driverless cars to an internet we don't look at a screen to interact with, and on and on and on and on. And I think a lot of people are aware of that. JP Morgan, look, banking is going to change, but JP Morgan is making the investments now so that they're at the forefront, and they have consistently been at the forefront of a lot of key hinge moments throughout history, being ahead of the financial crisis being just one more example. And I think that this is the kind of financial company that will find a way to be useful to hundreds of millions of people for years to come.
Let's go off the beaten path then, if we could. Invitation Homes.
Right. This is a secular trend. I think the idea of rental single-family home as opposed to living in a building, but going out to the suburbs and yet not being tied down to one town or neighborhood is a forever trend for people who are in their 30s and beyond. And what Invitation Homes looks like in reality is just this incredible situation where a new family can say, okay, we're not going to get a mortgage, we're not going to do what our parents did, but we're going to have a gorgeous house in a neighborhood that allows for a very short commute to a job at an up-and-coming company. And look at their portfolio. They're in places like Atlanta and Florida and California and all of the key growth markets, and they make home ownership feasible for people who don't want to mow the lawn and fix the roof and do all of the things that I now do, like a schmuck, They are basically doing home ownership 2.0, and I think it's brilliant. And by the way, the management team here, this is a combination, a merger of two very powerful private equity companies' units where they've bought up about 85,000 single-family homes. So that's one.
Give me Store Capital.
Store is another, in my view, secular trend. This is triple net leases, and actually the guy who invented them is the chairman of the company. Warren Buffett is the largest shareholder through Berkshire Hathaway. They went limit up. I think they're at 9.9%. And they can't go to 10. If they were to buy any more, they would trigger something within the structure of the company. But it's a REIT. However, it's not retail stores. Instead, it's all of the businesses or tenants that Amazon cannot Amazon. So pet care, veterinarians, massage therapists, hairdressers, gyms, personal trainers, tanning salons. These are things that will exist no matter what a company like Amazon does on the internet. And Store Capital locates these types of businesses that own their own real estate. And they say, knock, knock, we will let you free up the capital you have trapped in that real estate. We'll take it over. You lease back from us. By the way, there are tax benefits. And also, they're actively managing that portfolio. So when they see one of their tenants in trouble, they can get out of the building if they need to or find a new tenant or both. So this is, and by the way, this management team was vetted originally, seeded by Howard Marks at Oaktree. So you have the two smartest investors alive, arguably. Buffett and Marks have given this team their imprimatur. And I think it's just an absolute home run for a 10-year hold. And I've been accumulating it steady.